Welcome everyone. Thank you for joining me, and let's get going. What I want to do is I'm just going to talk to you very briefly about my journey into day trading. By all means, punch in any questions, and then after I've done this initial little chat, if you want to open your mic and ask me something, that's fine. But I'm just going to walk you through a little bit about my journey into day trading and talk about what I'm doing at the moment, what markets I'm very active on, what markets I'm sitting away from, and then we can hopefully you can gain some insights from that and take something away from that. Okay, so one of the most common questions, one of the obvious questions is, should I day trade? If some of you watching this are considering starting to day trade, or maybe you've tried day trading and it's worked part of the time, not all of the time, etc., and you want a bit of a steer and think about whether it's right for you, then I think the main question is, if you're asking yourself, should I day trade? The answer is not if your life depends on it, not if your income depends on it. If you are working full-time and you have an income which is supporting you and your household, then walking straight into day trading is not a good idea. What you need to do is ease into it, get used to it, and then when you are consistent, go full-time. Okay, now I suppose that leads me on to the next point is, can you be a consistent day trader? Of course, the answer is yes. But again, the crucial point is there is a learning curve. There is a process to go through. You might find, perhaps some of you, and this is me, particularly in the early days, you might sort of have a really good day. And then perhaps the next day you give a lot of profits back, and then your profits are very flat. Sometimes you had a good day, sometimes you had a bad day. It's but a lot of people, when they start day trading, they either lose. My broker says 75% of the people who have an account with them lose money. So only 25% of the people obviously are making money. So a lot of people come into it and lose. Perhaps they blow an account, top their account up, and then gradually lose it a bit. Or maybe they get a really good start in day trading, get very aggressive and greedy, and then give a lot of profits back. I mean, I've known people I've spoken to 2 traders over recent years who've lost 6-figure sums. There was one he's a really good day trader. He made a lot of money. I think he said he made about $250,000 and then gave it all back. I met another guy, I mentored a guy who completed the mentorship, and then I think he made something like 140, 150,000 in a couple of months, and then gave a lot of that back as it hit. I think he made it in the spring, hit the summer, and gave a lot of it back. So you've got to know, day trading is fun. It is easy, but there's a process to go through, and there's a mindset that are all part of the learning curve that you need to master before you can be consistent and before you can do this full time. So, and what are the advantages of day trading? The advantages are you can use a lot of leverage. I don't often hold leverage positions overnight, which makes my life a lot easier. And I can hedge, so I can offset some risk that I've got in the marketplace. Obviously, well, I'm getting complicated now. Let's keep this simple. If you want to make an income from, a regular income from day trading, then yes, you can do it if you've got if you educated in day trading, this is not luck. This is not a gift. Nobody's born a day trader. It's about education like any other profession. And then you can monitor your progress, manage your risk, and then you can make money. I'm using boring words like managing risk because that's where most people slip up. Most people lose money because they don't understand until too late what they're doing to their account, how they're eking away at their account. My particular journey into day trading was as an investor. I was a long-term investor and a swing trader, buying and holding while I was building a business, as it happens in financial communications. So I was in the sort of financial world right from the start, right from leaving school. But I then signed up for courses with not just UK traders, but some US traders, some very, very good US traders. And day trading in the form that I use it is based on American strategies and American day trading theories, because day trading over there has always been, in my career, lengths ahead of what the UK or what European traders were doing. So I spent a lot of time with Americans and American day traders learning the skills. And what I teach in day trading is actually a culmination of various different people's training courses. I've stitched together many different people's day trading courses to come together to put my system together. So what I'm showing you here is bigger time frames, 2 hours, 4 hours, and daily charts from left to right. So while I'm talking, I'm just going to get you to look at this and see how my system is set up. You can see it's fibs everywhere. All these charts, all these 3 charts have got fibs. You're looking at gold. But at the end of the day, I mean, let's keep this simple again. Trading primarily in its crudest form is only about support and resistance. And what does Fibonacci ratios show you? Fibonacci ratios show you universal support and resistance levels. So the system I use has got a massive bias towards Fibonacci. It's not by no means dependent on Fibonacci, but it's certainly a main ingredient. But the way I use Fibonacci is very, very different from anybody else. Okay, so let's just recap then. I was running a business in the financial services, in the communication side. I was using a very, very simple value system that I had pretty much taught myself, really, with a lot of background reading. But then when I made the transition from investor to day trader, I invested in specific courses and training that taught me how to use leverage carefully in these volatile markets. Momentum markets are the ones I like. I love oil. Gold is okay, but it's a lot less volume in it. I actually cut my teeth on soybeans, day trading soybeans on the CME US exchange. Loved it. And of course, that's where my love of oil comes from as well. So, the key stations in learning to be a day trader are those. You don't make the jump if your household income depends on it. You need to be a consistent trader before you go full-time. And to do that, you need to go through the learning curve. And the part of the learning curve is also trading psychology, because we all have losses, and it's about how you behave in a loss, how you manage your account, how you manage yourself and conduct yourself to protect your capital at all time. At the end of we all know we are, if you're risking your capital, you need to go into the markets fully aware of how you're exposed and how you can protect yourself. That's why I like day trading. When you become a professional day trader, one of the things you can do is, as I said before, repeat myself here, but it's hedging. And that's why I like day trading, because I think it's a fun thing to do. You can make fast profits as long as sometimes I make really fantastic profits on some days, and some days I hardly trade. For example, we've got US interest rates tomorrow, so I've only done one trade today. So two trades. I did two trades. I took the lows in the Dow, and I've actually shorted these highs in the gold. So let's just move on to the actual. Let's talk a little bit about more about my system then. I'm not going to sit here and teach you my system, because that's it's very time consuming, and it's somewhat dangerous to give you snippets rather than you go on instead of going on the full program. So what I'm looking at, so I said not that long ago that the essence of trading was support and resistance. Well, this is the daily chart on the far right here of gold. You can see we've already got a few days of lower closes here. So we had this wave pattern up here into this, as we looked as if we were heading towards 2000. Now we're under this 1966 level and struggling. I mean, here's a 4-hour chart with the move into that 1988, 1987. We've been winding our ways down, and now we have hit this resistance area in the daily chart, and potentially there's the 20-day average down there at 1946. So it would make sense to come and see that 20-day average. Any market that gets too far away from the 20-day average tends to come and find that at some stage before it goes to the next leg. So if I can get a move into 1940, 1946 as a day trader, I will be happy. But I will get out of this trade if we come into some support, it picks up here, and the volume picks up and stops and takes me out. So another advantage of day trading is I can get really close stops because my system is quite pit precise. When the markets are very volatile, I can take positions where, I got in some of these charts, pretty what I would call pretty small stop loss orders in the book, and that's again something I really like about day trading, because I don't have to risk. I don't have to put my house on the line every day of the week. All I'm doing is, a lot of the time, but when I'm trading, I'm using some of my profits to support my trades. I'm not using my capital. But that's the point where you need to get to. The sooner you can get to that point, the more relaxed you are as a trader, the more focused you are as a trader, and the more money you're likely to make. So that's what the journey, that's why I've set this session up, because it's about you and your journey and your background. It doesn't matter if you've not had experience in the financial services industry. That is no means a precursor. I've trained IT specialists, project managers, all sorts of people from completely different walks of life. As long as they are prepared to invest the time and the effort into learning how to day trade, then they are the people who will make profits. They are the people who will be consistent. And they're the people who are going to make a living out of this and be able to give up the day job. Because I presume, in most cases, or some people come to me retired or semi-retired, Other people come to me because they want to give up the day job. Maybe they don't like the day job, or don't like the commute, or both. Anyway, that's what I wanted to talk to you about. So just moving on a bit from the journey. If anybody got any questions on the journey or wants to have a chat, that's fine. Yeah, to do so now. Otherwise, I'm just going to use a bit more time just to talk about what I'm seeing in the markets here, particularly as we are 2 3/4 hours off the US close, heading for Fed Day tomorrow. So let's get some of these marks off the screen. Yeah, so on the 2-hour chart, you can see that this 1983 on this particular chart was a major resistance area. If we stay under this 1960, 1963 area, then I think we could, at the very least, we'll see 1950, and possibly, I think we might even see 1940. The dollar, this is a dollar traded commodity, and so if the dollar is going to gain strength on the back of an interest rate rise, then it would stand to reason that this gold could drop further. And that would suit me down to the ground, because let's have a look at the overall trend line in the gold, because I would love to be able to buy a decent position in gold. I have been holding onto gold on various points in this. But you can see, we're in the danger. We come into this pink zone here. We've got a potential head and shoulder, here, and the main neckline was here. So that saw us drop back into 1895. We've since punched back into 1980, which is this whole resistance area. So if we can fall back into perhaps into this bar here, that would suit me, as long as there was volume coming in. We saw volume increasing on that dip, then I will buy into that and see if then we can punch back up. All right, but I'm not going to sit long in. Again, this is, I think, think about hedging. Spreading your risk. If you've got a long position in gold, maybe you bought gold down here, and I notice there's a gap down there, by the way, and I keep forgetting that. So if the gold really catches a cold, could come down closer to this 1850 area. If we do close lower here and break under the 20-day average, there's a possibility we could come and find that gap. Yeah, so if you are long the gold from down here, in maybe an ETF, or maybe you've been buying miners as miners dipped down here, and if you see gold coming off, you could counter some of your profit that you're losing and giving back to the market, if assuming you want to hold on to gold, by day trading. And that's a better example of that is the Dow. Let's go to the Dow a second. Dow's having a pretty good day, actually. Yeah, so you might be, if you've got some long positions in the market, you're buying and holding, and then this decides to pull right back. So we saw some significant pullbacks here and here, but interestingly, how this line in the sand, this 33,750. See how good my charts are, because my charts have picked up all that 33,750, and here we are at 35.5. So all of this move up here, assuming you stayed with the trend, and respected that support in your trading, you should still be in that position, or still certainly buying dips. But if you've got some stocks that are perhaps not catching up with this, perhaps they're going sideways or even dropping off, again, you can hedge. Take counter positions in long side positions in this index, and all the time it closes higher, stay in it, buy dips. It's as simple as traffic lights in a way. This whole idea of support and resistance in trading. If you've got a lot of red on the charts, well, either short or back off. If you've got some of these support levels and you're finding higher closes, buy the dips. The general rule of certainly my trading is, if you are above the 20-day average, buy dips. And vice versa. If you're under the 20-day average on the daily chart, sell highs. And we pushed up here into trendline resistance and then slammed lower. So then you subsequently short any highs until you get back above the 20-day average. So these are very, very simple, basic strategies that could help you make a profit as a day trader. They can help you hedge as an investor, and have fun trading. At the end of the day, to me, if I'm not enjoying trading, then I'll get out. I'll stop it. But all the time I'm enjoying trading and my system is working, then I will get into that. Right. One of the things I'm doing in this quieter summer period is really freshening up all my courses and spending the time freshening up everything for my day trading and my investing, just so that as we come out of the summer and we hopefully will see a lot more volatility, there'll be a lot more opportunities. And then I like to build up the day trading room. And I've been talking for a long time about how the club membership can work. Well, now it's much quieter, and I have increasingly fewer family demands. And in fact, I have very few family demands now. Now things have moved on in my private life, then I can fine-tune what I want to do with the club system and get more and more people involved in that. Right, so the Dow's having a very good time. I think the thing to watch out for with this is, of course, a lower close. Let's put the volume on here as well. So we can lifeblood of trading. Yeah, so we are actually coming up on, okay, this market's still got 2.5 hours to go for today, but we are coming up on declining volume. So there could be a short to medium term pullback in this market if obviously tomorrow is a crucial day, but that's something to watch out for. I'm just sorting a trade out here, bear with me. That's good. That's fine. Right. Yeah. So if we start to tap into this underside of that trend line high and fail, or just get a major close on the daily chart, and then particularly if we start closing under 34.5, then we need to really get on the short side and see if this market is going to pull back. I think the most likely scenario is if you look at the 20-day averages on these charts, which are not something that are written in stone, but are certainly a good gauge. normally the market would start to fade at the end, start to run out of steam at the end of July. We're at the end of July next Monday, and then dip back into support coming the end of August. I don't know why. It always seems to be the third week in August where the markets, if they are going to bounce, third week in August seems to be the main move. So if this is now a huge area of support, so if we come back to the top of this pink zone, and if we do come down that far and hold, then this is something to potentially watch out for. If we come back to this pink area and close underneath it, then hold on to your hats. If we close underneath this 33,750 on the Dow and subsequent support levels on the other indices and other markets, then watch out. The other thing I'm doing at the moment is no. Fed days, good question. I would not day trade the Dow tomorrow until 7:45 UK time, because that's 15 minutes after the press conference has started. So I want to see the reaction to the rate rise, assuming we get a rate rise, and I want to see what the market wants to do with it. So I would day trade the Dow, but only in the last hour and 15 minutes of the day. And if there's no clear signals, then I'll leave it till the next day. Quite often, the best days to trade is the next day after big data, because then if the market does tip over, you can short retest of that resistance, or if the markets do close higher, you can continue to buy pullbacks. Okay, let's have an update on, let's look at the FTSE. You can see why it could be time to short this FTSE. It's ECB, so we've got Fed tomorrow, ECB on Thursday, Bank of England Thursday next week, which puts it at the 3rd of July. Sorry, 3rd of August. So if all the central banks put up the interest rates, is that going to choke this market? Possibly. Just trade what you see. Don't go around shorting the heck out of everything. Just if there are shorts available, if there are short signals up there, then yeah, by all means, get short and stay short. But you can see how this is such a crucial area in the FTSE. And it's very common to overshoot resistance. But if they subsequently close underneath it, then you can get short. There's your signal. And then if it does get short, then you can keep shorting the highs till it stops working. And you can see just how far away the 20-day average is on here. 20-day average is miles away. And in most cases, I'll answer that question in a minute. In most cases, once you get a little bit too far away from the 20-day average, and which we are very, very far away from the 20-day average here, markets like to come back to their mean average. So the chances of that FTSE pulling right back now is getting higher. And this is coming up on lower volume as well. So to me, that's a clear signal. Market that's going up with volume tailing off is not sustainable. So the probability of this either dropping very soon, or perhaps getting another lift up into a further area of resistance, is the opportunities ahead of us. For my day trading system is always looking at the bigger time frames first and foremost. Always looking at the bigger time frames, and then I go right down to the smaller time frames. But in each case, the smaller time frames, I don't trade off of. I'm not taking day trades off of these charts, but they're very, very important to me. They're certainly on one of my screens, telling me where the key areas are. I trade down into small time frames, but I only use the small time frames to fine tune my trades, to fine tune the entry. I'm not using them to make key decisions of. Why? Because too many people trade off small time frames and lose money because smaller time frames by their very nature can give you mixed signals, particularly into the open period. You might have small time frames that are really stuck. In fact, that's what happened today in the Dow. The Dow was stuck at 360 and to 380, or maybe a bit higher than that, 400. And here we are at 500. So the Dow was chopping around in quite a small time frame initially, quite a tight range, and then eventually broke up. But because my system was telling me the lows were buyable, and so we were buying 380, 390. And here we are now. We've been above 500. At the moment, it's just coming underneath 500. So yes, I use small time frames, but only once the bigger time frames have told me where the direction is, so that I don't start getting trapped in over trading. One of the problems I had in my journey as a day trader was I overtraded. Some people I've had people come to me who have problems pressing the button, have problems taking a trade, or they come to me and they overtraded. But my personal problem was overtrading, and that was because of an over-reliance in the early days of day trading, an over-reliance on small time frames. Once I pulled back, developed the system, I noticed in some mid-range time frames some trigger, what got me to spend many hours, literally hundreds of hours, developing the system, because my mid-range time frames were sending out really good signals, and my small time frames were forcing me in and out of too many trades. I was over trading. So I was able to become a consistent trader by learning how to use the bigger time frames and fine-tuning my entries using the smaller time frames. And you could even in the US, most traders trade off of options. They don't even buy the stock, and they don't even bother with futures. They just trade off of options. So that's why they use, a good options trader will be really locked into what the bigger time frames are doing, and like me, fine-tune entries of the smaller time frames. And that's if there is a secret to day trading, that's the secret. The secret is not to get tied into very small time frames. Yeah, I use in summary, I want to see a daily chart that can go above the 20-day average and sustain the market, the price above a 20-day average on a very basic level. And this FTSE has done incredibly well. We closed above the 20-day average on the 18th of July, and here we are on the 25th, still closing higher, still closing above the 20-day average, and potentially going above that main area of resistance. So the daily time frame gives me the overall trend. Then the intermediate time frames, the 2 to 4 hour, give me key support and resistance levels, and then my smaller time frames give me entries, and in many cases exits as well. Because I'm using leverage, I sometimes I've only picked up about 120 pips on the Dow today, which is relatively small for me. And my short on the gold is probably just slightly in profit. I think it might be break even now. No, I'm slightly in profit. I am slightly in profit, but you can see the gold's beginning to pick up. So I got short up at these high levels, and if this daily bar closes up here, then I'm effectively counter trend trading. So I need to be careful. I'll either just close off the trade and wait until the Fed have announced, and then we'll get the direction from that, and then I'll reconsider the trading opportunities in the gold and, of course, all the other markets. Well, let's have a look at oil. I said in the room, I thought oil, this weekly daily chart in oil was really, really bullish. I liked the way we were nestling up here. The volumes were increasing. We started closing higher. When we did go back, we only went back to a trend line. And the key for me was closing up above this $70. And here we are at the moment at 79.50. So here's the 20-day average following the market up. It's nice and even. So there's absolutely no reason to sell this oil at all. In fact, at the moment, oil looks as if it could go back through the 80 mark and into 85 and potentially 90 plus. So if we pop back, if the dollar gains strength and this oil falls over, and we pop back to this, I think it's 72, we pop back to there and then hold, the volumes are increasing up here. But if we do fall back, this is a kind of area that I will consider buying again. In the meantime, there's still plenty of time to buy dips, and there is no reason to sell the oil. All right, well, I hope that helps. The next day trading program is next Monday. So I'll just post in the room the link for that. So just to very quickly go through that and not use up too much of your time. So this is all about trade daily, earn daily. So this is all about the system I developed over quite a long time now. We look at how the open price is. We look at the possible intraday reversals are very profitable. I haven't had one for a while. In fact, did we have one last week? I don't think we had one last week, which is quite unusual. Sometimes an intraday reversal can lead to a sell signal on the daily chart and a complete trend change. That's why sometimes they are very profitable. Sometimes intraday reversal is just a very, very deep pullback. They vary, but they're quite easy to tell them apart, very easy to tell them apart. So the whole point is, if you come on the program, so I'm just trying to wind this up a bit. What you learn is, here we are, you learn these key strategies. You learn the gap strategy, and you can scale these up and scale these down. Anyway, but for day trading and using leverage as a gap strategy, it's trading the open break, which the trading the open break's been fantastic the last couple of weeks. this market has been incredibly buoyant. The big reload is very, very healthy pullbacks after the open period, which are often well worth holding into the close. And that, at the moment, that's what's happening at the moment. We had a decent move up in the Dow. I sold quite close to the early session high. The Dow's pulled right back. It's reloaded. It's met the criteria for a reload, and now it's broken up that resistance and gone. So it's done a three-way move: open, move, pull back, and direction. Okay. Yeah, and but the main thing is, if I just scroll down slightly, the main thing is you get to learn about the anchor system, and that's crucial. The anchor system is what really is the bedrock of the business. Yeah, as a day trader, you effectively go into the business of trading, and then to make sure your trade's on the right side of the trend or picking up on intraday reversal, you need the anchor chart. So that's all tied up in the system. Money management is absolutely fundamental. You will not be consistent without proper advanced money management. And then what you can't see here is all about the live trading room. Just make sure you can see that. The live trading room is open 4 days a week, so we avoid. I did used to open it on Monday, but it's I think it's very, very healthy not to trade on a Monday. Just let the markets come and wriggle around on the first day of the week, and Tuesday is normally much better. Tuesday is quite often one of the best days of the weeks to trade. And if you've got a very healthy trending market, you can just buy pullbacks the rest of the week. And then you get, once the live room's finished, the chat room takes over, and then you get alerts in the chat room. All right, if you wanted to go for that, if you wanted to join us next Monday, then this link here will tell you how much it is. It'll tell you how to pay. And then that will give you, it actually says 4 weeks in the room. If there's a summer special, I'm very happy to let you come in the room for 8 weeks for that money, if you wanted to come in. All right, so the link for that, so you got the information off that link, and then the booking form is down on that page. Any questions? So this oil it's been sterling. It's sitting up very comfortably, looking like it wants to go higher. The gold has actually gone back to the resistance area at the moment. It's a counter trend trade. I'm shorting with them in a market that's above the 20-day average. That's why I've got very, very little leverage on it. You've got to go, okay. The system works best on Dow, the US indices, Dow, NASDAQ, and S&Ps, and oil. It works perfectly well on gold, but the problem with gold is it's a slower market, and there's no reason at all why you can't apply this to Forex or even cryptos. It will work satisfactorily on Forex and cryptos. In fact, let's have a quick look at some Forex. I'll just call up the let's call it the pound. Let's call it the euro, because we've got euro rate decisions. Yeah, so you can see how the euro had a really good run into the 18th. So now just ahead of the ECB, we're sitting right on all that support. So if the euro can go back above 110, then it is possible the euro might go back up to that resistance area. It is possible euro might follow that trend all the way up to 115. However, stay underneath that 20-day average, start losing a footing under 110, and we're going to pull all the way back to 105, maybe more. So this is very, very typical going into rate decisions. You'll find these markets will sit on key pivots, and then once the market makes the decision after the data, then they are tradable. Okay, let's have a look at the DAX as well. DAX is still sitting up. DAX is actually looking quite good here. If we can just close above 16.3, this DAX could motor, but it's primed as usual, going to ECB rate decision right on a trend line. So whatever happens around here, whichever way that DAX closes around that pink zone, is going to be your direction for the near future. We come and sit up above that 16,290, and this DAX could really take off and go to 17.5. Close underneath. If we push up into there and subsequently close underneath 16, then we're going to come all the way back down to 23 lows and possibly more. And that's typical with a week like this. Brilliant. If you want to have a chat about anything, let me know. Drop me a line from the website or the email. Otherwise, any more questions, this is your last chance. Hope you have enjoyed that, and look forward to seeing you. I'm doing a big market review at 6 p.m. on Wednesday, tomorrow. So you're welcome to join me on that. All right. Doesn't seem to have any questions coming in. That's good. Thank you for your questions you did post. That's great. I appreciate that. And talk to you again. Have a very good evening. Bye for now.